Welcome to the SARE Ladies podcast. This is where Asian American Pacific Islander women carve out their own space in real estate and shake up the status quo. Join your hosts, Anita Wong and Ashley Cow, as they dive deep into bold strategies, personal growth, and everything it takes to own it. From building wealth to boosting confidence. Let's jump in.
Welcome, friends, to the season 6 of the SARE Ladies podcast, where we break down real estate wealth building and what it takes for API women to play at a higher level. I'm Anita, and I'm here with my co-host, Ashley. Say hi, Ashley.
Hello.
So today's episode is a special one because we're coming straight to you from the deal room, from the broker's lens. And we're joined today by two incredible guests who sit at the center of multifamily transactions, capital, and market movement, and meaning that they really see what is behind the scenes before most investors do.
Yes. So first, we have Jack Stone, who co-leads the Dallas-Fort Worth sales team at Greysteel. He advises private owners and institutional investors across Texas. He's also a former attorney and the co-host of the No Cap podcast through CRE Daily, with an audience of more than 100,000 subscribers. So welcome, Jack.
Hey, thanks for having me.
Cool. And second, we have Sterling Warren, senior associate at Greysteel. She started her career at Greysteel as an analyst and moved her way into investment sales. So throughout her career, she has been involved in over $100 million of annual transaction value. And beyond brokerage, Sterling is actually deeply involved in the real estate community and women's leadership organizations such as Crew. So welcome, Sterling.
Thanks. I'm excited, guys.
Sterling knows everybody in Dallas.
Okay. She's the local celebrity.
She's out and about and doing
I don't know about that. I enjoy it. I enjoy networking with everybody.
Cool. Well, I do want to just kind of get some more background from you both. So, Sterling, can you give us a little background of, who Greysteel is and why you decided to join Greysteel?
Yeah. So what Greysteel, we're a national platform. We do everything commercial real estate related. Jack and myself sit here in Dallas. We focus on the multifamily investment sales side of things. So really representing buyers and sellers on the transaction of it. So kind of serving as the middleman. We're speaking with owners and operators in the market and, hoping to get the opportunity to list their deal and bring a buyer to the transaction. Something that, really stood out to me about Greysteel is the collaboration that they provide and the resources through our shared database. So, like I said, we sit here in Dallas, but we are able to work very streamlined with the other offices through the database. And so that was something that was really unique by having that, team aspect and being able to get that exposure to, hundreds of thousands of users within our database and having that reach, I thought was really, something unique and not having that internal competition. So being able to get, so much exposure and working not only within our team here, but other teams in various offices.
But mostly you really like the team you work with, right?
I do. We have a great team here, and they're awesome to work with. I feel like I've grown up with these guys.
Yeah, it's kind of like family a little bit.
Spend a lot of time with them.
I'll kind of piggyback off of what Sterling said. I know not all of your listeners are necessarily in the multifamily space. I know they're not all necessarily seasoned investors. I'm sure a lot are as well. But I'm going to dumb it down a little bit. So forgive me. But you hire a realtor to sell your house, right? What do you do when you have a income producing property? In our case, a multifamily apartment building. What do? Right? It's not based on just aesthetics. It's based on the underwriting and the return potential of the property. And it's a different type of buyer base that's going to buy something like that, right? Other than your typical single family home. So you hire a group like ours. If you're smart, you hire a group like ours. And we come in and we analyze the property. We tell you what we think it would trade for in the market currently based on the underwriting, the market fundamentals, what the buyers out there in the market are underwriting to. And we give you a price range. We say it's going to be worth between X and Y, and here's why. We'll go through the underwriting with you. Here's our process. Here's how we market a property. It's different than a typical single family home where you kind of put something on MLS. It's much more proactive, right? You're actually actively calling investors, calling through your database. It's a much more active process. And it's much more structured, I would say. We're not just putting something out there. And that's kind of the deal, right? So you think of a realtor, but think about someone who is a little bit more in tune with the numbers aspect of it, a little bit more structured. We have 22 offices across the country, like Sterling mentioned. We all work off of one database. Kind of what that means is, in LA, when we have a broker just like us who's selling properties, they're adding real buyer information of people in their market. So when we market a property in Dallas, for example, those same people can see that same sort of, email blast, they'll get the same calls from us and so forth. So it's leveraging the platform, if you will. And then we'll market things, not just using our platform, we'll put it on third-party platforms. You might see LoopNet, which we always kind of joke is sort of a last resort way to market something, but you certainly do bring buyers sometimes that way. But we'll go on LoopNet. There's multiple other platforms we can market something onto in addition to our own database. So hopefully that helps.
Awesome. Yeah, very helpful. And I love that. I think, when you think of like the shift from a single family investor to a multifamily, you're now buying a business, right? And so the numbers do matter much more than the single family space where it's, usually it's just based on what's sold in the area and that's the price. And so,
right. And it's actually interesting. The multifamily space in particular has gone through a very crazy transformation over the last, call it 10, 20 years. It used to be mostly, I don't want to make generalizations, but it was often based on the basis. You would go in and you'd say, hey, I can buy it at $30,000 a door. I think other deals are trading at $50,000 a door. Okay, makes sense. Now I feel like our business has gotten a little bit more sophisticated in a sense that I think you see a lot of buyers who are actually looking at the IRR, the internal rate of return, the cash on cash, the yield that it's actually spitting out to its investors and so forth. And I think there's reasons for that, but it's become more of a competitive space. There's more resources on YouTube and now ChatGPT to learn about all these things and through networks like you guys, right? Just learning how to look at a deal.
Cool. Yeah. Well, Jack, I do want to ask you about, I know you're the co-host of a commercial real estate podcast, and you typically have some, I would say big name guests on the episode or the show. So tell us a little bit more about that.
It's been a really fun, it's been a really fun thing to work on. It's kind of like a passion project that is, in our business, you see a lot of the same, right? And so it's really cool to kind of take a step back and learn about a different area, commercial real estate, meet some CEOs and founders that you'd probably never have another, excuse to meet and get in front of. So it's been really fun. Essentially, the CRE Daily is a very popular newsletter, goes out every day. If you don't subscribe to it, Google CRE Daily. It's a great quick read about what's happening out there in commercial real estate. It got to a point where they wanted to create another service line, meaning podcast, because everyone's kind of doing the podcast thing and it made a lot of sense. And so I was approached and it's become something that at first we were asking people to come on. And now it's been really cool in a sense that we actually have, Fortune 500 publicly traded REITs reaching out to us to come on the podcast. So we've recently had on the chairman of Boston Properties, the largest office REIT in the country. We've had on tomorrow we're having on the CEO of Fifth Wall, which is the largest venture capital prop tech firm in the world, right? These are things that it's just cool. It's cool to learn about something else out there that is outside of multifamily. And I think it also puts everything in perspective because when you look at multifamily from just a lens of multifamily, you don't understand what you're looking at. But if you look at it from understanding how other asset types are trading for and what the appeal there is, and because it's all connected, right? Mm-hmm. So I think it just makes my business much more interesting.
Cool. Awesome. Yeah. Well, before we jump into like the more, I guess, deeper questions, I did want to kick off with some rapid fire questions to get to know both of you a little bit more. So I'd love to
credit score and
what was that?
What's your credit score? And
I know, what's your credit score?
Who did you go for?
Social security number.
Yeah.
All right. So I'll have each of you answer the questions. So describe today's market in one word and why.
Bifurcated.
Bifurcated. Okay. And why?
You have some properties that are doing phenomenal and others that are doing terribly. Right. And I think that falls into also the K-shaped economy that we're kind of in right now. Right. I mean, you see some people who look like they're thriving and others who can barely get by. I think that plays into our business as well, because all these people need somewhere to live. Right.
Right. Sterling, what about you?
I'm going to go with selective. I think there's a lot of capital out there, and I think everyone is ready to get deals done, but they're being very disciplined and they're waiting on the right deal. So I think groups are being very selective on, they'll look at everything, but what deals to actually pursue.
Okay. This is kind of a good segue to the next question. Who gets the deal, the highest price or the most trusted buyer?
Oh man, that's always a tough call, right? I think in this market, you have to be really careful because anyone can come in with a high price, but to actually get the deal done is a whole nother story. And the last thing you want is to lock up your property under contract for months and months and months and waste everyone's time, not get it done. So I think it's very important to go with a certainty of close, but I understand if someone comes in much higher, you have a tough conversation to have, right?
Yeah, I was going to go with highest price. I think it depends on the situation, but we have a deal that we've been working on, and the seller is willing to take a little bit more risk on a group that they're not as familiar with because they did come in higher price. And I think right now pricing has been a big challenge. And so some groups, if they're able to take a risk on, maybe a group that they're not as familiar with or experienced buyer, I think, we're kind of starting to see it more. I will say definitely trying to do as much due diligence as we can on our end and calling through some of their references, but it's interesting.
Yeah, people don't realize one of our goals is to, and this is one of the reasons why you hire brokers like us, is like we're supposed to weed through the tire kickers, right? I mean, and we do that through a variety of ways. We see other deals they've worked on through our own database and through our connections, but we also have them fill out a buyer questionnaire form to give us more comfort about who they are and how they're underwriting the deal, where their capital is coming from, and so forth. And then we'll call references and do all those types of things. But I mean, we would almost never advise a client to go under contract with someone who we haven't done our due diligence on, at least to an extent.
Right. Cool. Yeah. So today's buyers, are they too optimistic or too conservative?
Sterling, what do you think?
I mean, my first thought is they're too conservative, but of course we're brokers. We want everybody to get, as high a price as we can. And I think everybody wants to be optimistic. Everybody's ready to get, deals done. Like, it's just still back to, being disciplined in the underwriting and not, getting too aggressive in some of your assumptions. And, the price still has to make sense.
Yeah, I think if you're a buyer right now, you probably are optimistic, right? Otherwise, you wouldn't be buying. I think that it's really easy to pull back and not do that right now, just because of what's happening out there in the world, and rates are still high. There's some volatility out there, energy prices going up. There's so many excuses you could make, so I think anyone that's doing a deal right now is probably optimistic for some reason.
Okay. Yeah. Well, same question but for sellers, are they too optimistic or too conservative?
Well, I'll say you're selling right now. For every seller's too optimistic. We'll put it that way at first, right? I mean, everyone thinks their property is worth more than it is. That's just a fact, and they should, right? If you believe in your property and you want to, create the most value for yourself or for your investors, you want it to be worth absolutely the top of the top of the top. What our job as brokers is to do is to really show you what the market is. And we do that by really hitting the pavement and bringing as many offers as we can to the table and pushing them on price and terms as much as we can to where you're going to get a real good sample of, hey, this is what it's worth. And I think we're in this market where very rarely is there going to be an outlier like there used to be. I think you used to maybe see more of an outlier, like someone who just for whatever reason, they're underwriting much more aggressively. I think now you're seeing kind of the spread come in a little bit, and it's like, look, this is what it's worth. This is it. And maybe we're talking about a percentage off, right, between the highest price and whereas before maybe it'd be pretty significant.
Yeah. And I think it goes back to on the seller side, what their motivation is from the beginning. And depending on that, it can lean them one way or another. Some groups, don't have much of a choice, and it is what it is.
Yeah, I think exactly. Like, there's no secret right now. Everyone's reading about the distress in the market because people overpaid for all sorts of real estate, but particularly in multifamily during, the post-COVID sort of craziness. So you have a lot of distress. People over-levered. They put on floating rate debt. Their debt service is out of control. They don't have any reserves left over, right, to pay for big CapEx projects like an HVAC breaking and so forth. So they have to sell. So I think a lot of the sellers right now are groups that, maybe they don't have to sell, but they're close to it. And certainly a lot of them do.
Cool.
Yeah.
All right. So I know another kind of topic that's been really popular is AI. And so do you think that AI is a game changer or just contributing to the noise?
What's that? What's AI? It's like all anyone talks about now.
I was going to say I think it's a game changer, 100%.
Yeah, we play with AI a lot. Obviously, I mean everyone's in it. We're integrating it into our processes and so forth. But anyone can suddenly underwrite a deal. Mm-hmm. I think the problem is, do you understand the underlying levers of that deal? And so I'm a little concerned about sort of those who are just now getting into commercial real estate. What are they going to do? Because they have all these tools where they can automatically underwrite a deal, but they're not going to really understand why changing this changes this. And what does this mean, right? I think there's some of a disconnect there.
I agree. Yeah, I think there's I guess you call it tribal knowledge, right? That totally. you just learn as you add more years to your experience and stuff. And
I think you have a lot of analyst positions that are going to be gone. Mm-hmm. And so it's inevitable. So that's normally where you learn. Sterling started as an analyst, and that's how she's gotten so good at underwriting and understanding the numbers, and ultimately becomes such a great broker. And she started at that point. And I think now, like, what's going to happen, right? How many mm-hmm. people have that opportunity coming out of college now to do that?
Right.
Yeah, it will definitely be interesting to see. I mean, they're coming out with stuff, every day on different ways you can use it. So, looking back at this conversation in 6 months, what we have to say, there's no telling.
Yeah.
But I think it's definitely important to, make sure you're knowledgeable in the space because it is moving so quickly.
Yeah. So, not to be a doomsday person, but, I think there's certainly the question of, are we going to get to this point where we're going to be on some sort of universal income of some sort? And does that impact real estate? Well, sure it does, right? Because your tenants are the ones paying you. So mm-hmm. are they going to be impacted? So I don't know. It'll be interesting.
Yeah.
Okay. What is the fastest way to get on your radar in a good way?
Go for it, Sterling. You were going to say something.
Well, I think it is, everybody wants to be the first call when there's a good deal. When you've got a good deal, I want to be your first call. Totally. And I think it is staying consistent, staying in communication and, not just being so transactional. I think everybody enjoys working with people that, they feel like they have a relationship with. And so I think, being persistent and following up, providing feedback so that I know, one way or another, if this is a deal is a fit or not. Picking up the phone, calling, emailing, just staying in touch. Because then I do think about you, when a deal comes across that would make sense. But so I think it's just really being consistent and communicating.
Yeah, I agree. And I think providing feedback is always important. Brokers like to be able to provide feedback to their clients. So, even if you're not offering on a deal, to provide, hey, the basis was too high, or, the occupancy in the market scared me, or whatever it is, right? So we can go back and actually provide that context to our clients, I think. And then to Sterling's point, like this is a relationship business. So, stay in contact, don't make it so transactional. It has become an ever increasingly transactional business, where it's, what can you do for me? And I get that, but you got to think a little bit more long-term and just treat people like they're real people, get to know them.
Yeah. Okay. Last question before I hand it off to Anita. So what is your biggest pet peeve to make you not want to send somebody a deal? It's kind of related.
Don't be an asshole.
Yeah.
Yeah, just be nice. Don't be an asshole. Don't be arrogant. Treat everyone with respect. That's all I got.
Yes, I agree with all of Jack's. I would say though, submitting really low offers or, continuing to be really low on where you're coming in on a deal and, I just feel like, you're answering all these questions and you get an offer and you're like, that doesn't even make sense.
And that's why I don't mind that if they're providing context.
Yes. Yeah.
I'd rather have an offer than not have an offer, candidly. I think the worst thing you can do for your clients is not get an offer because someone's scared about submitting too low of an offer. Like, your goal is to prove the market, get as many offers as you can possibly get. And then you can always push them up as much as you can. That's part of the process to begin with. But yeah.
We'd rather have feedback than no feedback.
Totally agree. Yeah.
Great. All right. Well, if you're ready for more questions, I think we're ready to go. Okay. Well, now it's time for our general questions.
You know what, Anita? I hate to cut you off. I was just going to piggyback on one more thing about what we were just talking about. I think people forget that, being a broker, it's tough, right? You're having to work two different things at once. You're having to go out there and try and win business, and then you're having to go out there and sell the deal, right? And what you will find often is, what's our business based on? It's at its core, it's cold calling, right? I mean, it might get to a point where there's less cold calling the more senior you get, or the better business is, or depending on what part we are in the cycle and so forth. But that's where it all kind of begins. And so it's really interesting because you get a sense for who you want to work with and who you don't want to work with based on how they react when you cold call them, right? If you haven't talked to them before and you pick up the phone and you give them a call and they're kind of an asshole to you, well, when it's time to where you actually do have a deal that they might want to be, take a look at, maybe they're not the first person you reach out to because of the way they treated you before. And it's a two-way streak, right? You kind of work off of each other. And so I think that's just something to keep in mind with anyone listening who's talking to brokers or who gets that call from some broker. It's the fifth broker that's called them that same day, right? And wants to know if they're a seller or wants to pitch them a deal that they're selling that maybe they have no interest in. I don't know. But I think it comes down to just treating everyone with respect.
Yeah, I think that in general, be a good human.
Yeah.
Good karma.
Everyone, you never know who you're talking to.
Yeah, never know who you have to. And everyone is doing business, and I feel like brokers even more than that. They're like therapists too. You have to work.
Especially in this market. Oh yeah, totally.
Yeah. Yeah, you have to like not just weed out the, like the why they're being not a real buyer or not a real seller, but like all the emotional stuff that come in
It's so
between.
funny you mentioned that. Like, I really do feel like we're more therapists these days than ever
Jack
before.
does always say that. He always says, I'm a therapist.
Yeah.
I feel like sometimes like you'll have an offer in hand, like in front of like a seller, and they'll be like, no, it's not enough. And you have to really
You're like, take the
tease
offer.
out.
You don't understand. This is a good offer. You're not going to get this again. Or just, yeah, I mean, there's a lot of it's unfortunate, right? But we're just in this part of the cycle, and the way the business is right now, there's certainly some who are selling and making out like a bandit, but I think more people are selling and, they're not too thrilled with the returns, or they're losing equity. And so you really are someone that is in the weeds with them. And I like to think that we treat, this sounds so salesy, but like, I like to think that we treat our clients like they're part of the team a little bit, and we're in it with them. And it's not just a transaction, and we are empathetic and understand the struggles that they're going through, because we look at their property like it would be our property, and we get it. So it's a tough time. I think you want to work with people that get it.
I feel like this pet peeve topic can be a whole separate thing in itself.
And we can go off on this.
I feel like there's some in your pockets, guys. Okay, so from your seat as brokers, having seen so many properties transact, and Jack, for yourself, having speaking to so many celebrated titans of industry, I want to hear about what you kind of find as a common trait between those top 1% of investors, and what are they doing that isn't always so flashy, but really made them in that top 1%.
Well, I think there's a certain level of confidence. I mean, it's scary, I think, to put your ass on the line and go after a deal, especially you're starting off. I think you got to have just confidence that you're going to be able to get it done and build that network and education and, and perseverance, because I think it takes, hundreds of offers sometimes before you get that first deal, as you guys know. So yeah, conviction, confidence, perseverance.
Sterling?
Yeah, I would say the same. And kind of goes back to like the, being disciplined. There are a lot of deals out there right now, and there's a lot of brokers out there, and, it's providing feedback to all of them, underwriting all the deals, really staying engaged with the market, and, asking the right questions. And, I think it's making sure the deals that are out there and having those conversations, and staying relevant, but also being, disciplined in your underwriting and your offers. So that again, you're the first call.
Discipline's really tough, because the expectations between buyers and sellers are still pretty wide. And I think over time you can get a little lazy on the discipline, and you just want to get a deal done so bad. And, say as a broker, right, our jobs are to get the best buyer at the highest price. So, maybe if a buyer loses some of the discipline, we're not going to be coming to them and say, hey, are you sure you want to pay this? Like, our job is, right, to represent the seller and get the highest price as possible. But I mean, I think that those who have really had success have maintained some level of discipline.
Got it. Okay, so why do you think most investors never actually get access to real deal flow, and especially in multifamily where there's so few deals? Really, it's not residential, right? So what makes how does actually an investor get actually access to basically how do they get access to the first call?
well, first and foremost, sign up for the email list. Right. I mean, people are always like, hey, send me deals. Well, it's not hard to go online and just sign up for the, marketing blasts. Every brokerage has that. I think that's the first thing. And then the other thing is what we kind of mentioned earlier, just staying in front of people. Sometimes the deal comes across our desk that day, and then later that day, someone emails or calls and is like, hey, checking in. What are you seeing out there? I got this deal, just came across the desk. Like, now we're listing brokers primarily. So we list a property and run a full marketing process, because we believe that is the easiest and also most efficient way to get the best price possible. But there are off-market deals. And so when you mentioned like, how do you get that first call? I think usually what you're probably thinking about is the off-market, right? Hey, someone's got a deal, it's not listed. Every buyer wants that off-market, deal where they theoretically don't have to compete with, a ton of other people. So it's just staying in front of them. By the way, on that note, the off-market deal is not always better, because in a down market, like we sort of are today, although maybe coming a little bit out of it slowly but surely, but very slowly. In a down market, sometimes the marketed deals are going to be the best ones, because those are the ones where the sellers ultimately become realistic, because they're actually being shown what the market is. Whereas with a lot of off-market deals, you can imagine they're not being shown what the market is, and they're also seemingly not as, convinced of a seller. If they were real sellers, why wouldn't they just market the property? So sometimes you end up as a buyer wasting time or overpaying for the off-market deal. But there's benefits and pros and cons to both.
Yeah. And another thing I would say is, like back to networking, being involved in, different organizations, and going to events, whether they're, local or conferences, and getting in front of as many people as you can, because maybe somebody there is working on another deal that may seem interesting to you, or there's a broker there and they share, some deals they have coming out to market. So I think that's a good way for investors to, know what's going on in the market and what deals are out there and who else is looking at these deals. I think it's just a good way to always be, involved within the industry. And I'm a big believer of, going to the networking events and staying in front of everybody.
We'll put it on you guys. Anita, Ashley, what works for you? What do you think's been the best sort of strategy on your end?
I think showing up in real life for sure. I think, it kind of echoes what Sterling is saying, but just being a face behind the emails, I don't actually think that you can get real deals unless you are showing face in town. I think there's, to me, also a feeling of, it's a really tight club. Everyone knows each other, and if you're not showing up at the bar, you're not showing up like, hey, it's you again, then you're not going to get the deal. So I always say that it's not one of those things where it's like a Redfin thing. It's not like you can just keep browsing and thinking that you're going to be able to get one of these deals. So you have to show your face, do the dance, like be on camera, be on stage as much as humanly possible, and show that this is what you're dedicated to. You're in it,
So what's like, how often a year do you try and make sure you stay in front of people that way? Is there like rough guidance? It's just as often as you can? Is it, because, I know, I'm pretty sure you guys own all over the place a little bit, right? So, how often do you make sure to get there throughout the year?
So my particular situation, I'm from California. I invest in Dallas. And so when I was just starting, I was basically there twice a month, I would say. So I was always getting in front of people, shaking hands and, showing up to the big conferences until the same people like being like, oh, I've actually seen you before, until you get to that phase, you need to that. I think at this point, maybe I'm like once a month, but I'm also working on my own properties. And so I think what I also say too is like getting 0 to 1 is also the very hardest. And once you have the first one, you tell everyone and their moms that this is your property. And then you have something to kind of hold on to, right?
And by the way, that gives you more credibility with the brokers, right? So suddenly you got a deal and, brokers are like, oh, they're doing a deal, because you do get a lot of tire kickers. I will say you can tell pretty quick once you've done this long enough, whether someone seems like they're going to be a real buyer, whether it's now or at some point in the future. Whether they're asking the right questions. Sometimes they're trying too hard to look educated and overcompensating. Other times, you get a sense, which this could
There's
be
like an energy.
to talk to brokers, but yeah.
Right. Yeah. And just like someone, you can just get a sense of like who's blowing smoke up your ass, right? And actually who's going to be closing deals.
Right.
Right. Totally. And so, yeah, I think that was basically the best way. And like, I learned from going to a field trip. I actually had to go learn about the market. And I think there's nothing worse than an out of state investor who is trying to pretend like they're, local, like they pretend to know everything about a market.
Yeah.
You have to be there. You have to respect the place. You have to respect
Also,
the neighborhood.
To be honest, hey, really haven't bought anything in Dallas before, but tell me, like, I'm just curious, like, what type of cap rates are you saying? Like, is insurance still a pain in the ass? What is that now? Like,
right.
You can ask questions. Like, it's okay to ask questions. It's okay just to, I think coming off, honest, people can read, so just
yeah.
Okay.
And I think through time too, I feel like I've learned that, and that I feel like brokers are really trying to protect a neighborhood. It's like if you have one operator that you're getting in there, maybe they paid stupid money, whatever it was to get in there, but they turned the deal sour, right? It's just, and then that one deal basically sours the entire neighborhood, if not the city.
Yeah.
So I think there's like, there's like there's incentive for, basically it's a long game, right? It's the long game. Are you going to be one of those out of state investors that aren't actually planning on actually taking care of this and then not, and then, like screwing up all the deals in the neighborhood?
Well, I will tell you, I think that's very nice. I don't know if brokers actually think about it that way. Maybe I'm wrong.
Okay.
I think they're thinking, how can I make my commission and get this deal sold?
I suppose it depends on the market, I suppose.
I'd like to think that is what they're thinking.
I will say I do think getting in front of brokers is much easier when there's less to do. So
Totally.
if you want to get in front of one and start calling them, but like at a time where like the market is slow, that's the best time.
Yeah.
I will say, here's something, this is a pet peeve. Sometimes if something can be answered in email, just email. You don't have to always call for everything, although you should have at least one conversation with the broker. If it's, for sure, have that conversation, but it doesn't always have to be a call. I think, we're very responsive with email. We get 1 million emails all day, every day. We're always checking it, always. If it's hey, what pricing are you looking for on this one? And we've already talked about the deal a little bit, right? Because ultimately we want to talk on the phone and pitch the deal and why. But if it's something that's like ancillary, just shoot an email.
I feel like you're nicer than me and Jack. I just feel like if you're calling me, your house is on fire. You know what I mean? Like you send me a text in 2026.
Totally text, right? We all text. You can text CEOs now. You'd be surprised. Yeah, it's crazy.
Okay. So going back to sort of these seasoned investors, like what systems do you see that these seasoned investors have in place that really are the common characteristics of the best investors? So I'm talking about deal flow tracking, broker follow-ups, capital pipelines.
Yeah, I think you have to be organized. Everything you just kind of mentioned.
Yeah, I think all of it.
All
the above.
The key at the end of the day is, getting the capital, right? I think that's obviously incredibly important. I think it's more important now than probably has been in years and years and years. So the most successful ones are the ones that control the capital, for better or worse, but that's just a needed component. I think having good partners, right? Those who, we all have different strengths. So sometimes you see, one GP who has a lot of connections with various capital sources, and another GP who's a fantastic operator, and another GP who's great at talking to brokers. So I think those sort of relationships and partnerships work out really well.
That's what I was going to say, is having a good team in place. It doesn't have to be a huge team, it doesn't matter. But I think, recognizing your team's strengths and, really kind of spreading your time where you see fit, so that you have, your strengths and you have a good system in place to be able to rinse and repeat, so that you can continue, filling
Yeah.
your pipeline and still managing, the deals you do have so that you're able to look at more deals. And I think that comes with time and experience. And once you kind of build that process and it works, I think that's where, we see a lot of success is because they've got a good team built around them.
Yep.
All right. And so I guess I'll jump in with a couple questions. So in today's market, and we kind of talked about this, and you said, the people with the capital is kind of controlling the deal, but who do you think are the ones that are getting the deals done, and what are they doing differently?
I think they're underwriting to realistic underwriting standards. Right? There's too many deals that are going under contract and not getting done because people are coming in and overpaying. And if they're overpaying, they're probably not going to be able to get it done, right? Because you, at the end of the day, are relying on what sort of debt you can get. So you're going to be constrained by leverage or DSCR with the financing if you're overpaying, or your capital is not going to come in, right? You say, hey, you're overpaying for this. So just be realistic. I think that's the ones that are getting deals done are the ones who are underwriting to current market conditions.
Yeah, I agree. And I was going to say realistic underwriting, and then, having that committed equity.
By the way, we get the game,
difference.
right? I mean, not every buyer is going to have that committed capital before they get that deal locked up, right? Mm-hmm. You're already talking to investors, sure. You're creating your network, sure. Like we get it. We know what's going on behind closed doors often, but I think that if you have laid the groundwork in building out that network, and you have the right partners in place, you're much more likely to get a deal done.
Cool.
Yeah. And I think also like getting maybe creative's not the right word I'm looking for, but really doing everything you can to get the deal across the finish line, and being able to execute, I think is very important, because a lot of deals are taking longer to get done. And so having that, patience and
responsiveness. I mean, I think, if you're, under contract on a deal and we're reaching out and you don't get back to us for over a day, or, I think that's a problem. I don't really understand why people aren't a little bit more responsive to things. It's actually one of my biggest pet peeve is like, there's no excuse. Unfortunately, we have this with us all day, every day, right? So
the text.
Yeah. Like,
hey, I think over communicating.
Hey, I got your email. Get back to you later. Whatever, right? But just show that you're on it.
Yeah.
Cool. So where are you seeing opportunities right now that most investors are overlooking?
I'll say workforce housing, baby. I mean, look, that's the bulk of our business. So I'm a little biased there, but look, we've seen prices reset tremendously in that sort of Class B, Class C space. There's reasons for that. It's a little bit riskier. These are properties who have gotten, they've gotten burned over the last few years, right? People vastly overpaid for these Class C deals. It's interesting because at the time, I can recall being like, how is it that this sponsor is getting this deal? How is it that this sponsor with no multifamily experience just closed on a $30 million deal in which it, to me, looked like they vastly overpaid? And sure enough, we see those same deals right now that are getting foreclosed on. So if you're the seller at the time, fantastic, right? I think that those deals are now hitting the market at huge price resets. So whereas it was trading for $125 a door in 2022, it's now $90 a door, right? So I think these are great opportunities. You have to underwrite more conservatively because expenses have gone up, and it is a pain to operate these types of deals for sure. But I think, like they say, a little bit more high risk, high reward for a lot of these deals. And I think the risk is still there, but if you can buy at a solid enough basis, I think it's a great opportunity.
Yeah, I agree. I think there's a lot of opportunity with the basis play right now. And I think, to Jack's point, the workforce housing, there's not as many buyers. And, the easy deals are the ones that are very crowded right now. So I think, some of the messier ones, there's a lot of opportunity there. So, yeah, I agree.
The stuff everyone's looking for. All the institutions are back looking at, 2020 and newer vintage, very sexy apartment buildings, right? But they're not looking at that Class B, Class C stuff. And so there are real opportunities there, particularly over a certain price point. Your, normal syndicator is not going to be able to typically put enough capital together to buy a $20 million plus 1972 workforce housing deal. So if you can do that, I think there's phenomenal opportunities there to get deals at a really attractive basis with solid yield, either in place or sure pro forma. By the way, they don't make workforce housing anymore, right? That's something else to think about. So when we talk about the K-shaped economy, you have one segment, unfortunately, who's struggling more than ever and might continue to struggle. But at the same time, there's a lot of them, and there's not a lot of housing to support that.
Cool. Love that. All right. Well, I think we're coming towards the end of our episode.
What are the hard questions, guys? I thought we were some crazy ones here.
We were, didn't we say we wanted to be raunchy? But yeah, well, I really appreciate you guys jumping on our episode today. I really enjoyed the conversations. And, I think one of the kind of major takeaways, or I had a few, but first it's, this is a relationship business. So like just having conversations like this are really important, and getting out and getting in front of people is really important to really grow your business on all aspects, right? Whether you're a broker or you're a buyer or a seller. And then, I think you guys shared some really good gems on how to work with a broker and, what pet peeves to avoid. And then, and I really like the point of because I think, there is like the thing about, off-market deals are always better. And so I really like the point that you made that, sometimes the on-market deals are better just because the seller is ready to go. Right. So, yeah. So I really appreciate that. And, last thing here is, how do our listeners get in touch with you guys?
You can shoot us an email. You can Google us. We're out there. I'm sure you'll post something perhaps wherever this goes out.
LinkedIn. Jack's big at LinkedIn.
Lately, I've been big on LinkedIn. That is true. I found it to be a very interesting platform. I never get on Facebook or Instagram I think LinkedIn's a great platform. My wife just started working for LinkedIn, by the way.
Oh, nice.
So now I'm like all in. But yeah, LinkedIn, Jack Stone, I think it's Jack J Stone, but you guys can find us. Sterling, what's your handle?
I think it's just Sterling Warren.
That's easy enough.
Sterling Warren.
Yes, exactly.
And feel free to call us, shoot us an email. We're always happy to meet new faces.
Awesome.
Yeah,
cool. Well, if this episode, I can't talk today for some reason. So So if this episode resonated, share it with a friend and leave us a review. It will help us reach more people. So we'll see you next time on the SARE Ladies podcast. Thank you guys.
Bye.
Bye, folks.
Thank you. Bye.
Thanks for tuning in to this episode of the SARE Ladies podcast. If you enjoyed the conversation, make sure to follow, share, and leave us a review. It helps more women in real estate find this community. And don't forget to connect with us at sareladies.com for more resources, stories, and support on your investing journey. Until next time, keep building, keep learning, and keep breaking barriers.